Facebook IPO foul up, to put it mildly. And now the bad trade by Knight Capital. A lot of investors have lost confidence in the markets. Joining the company now from Connecticut, Peter Schiff with Euro Pacific Capital. Knight, by the way, is now at $3 a share. It has opened for business this morning, but it's way down. All right, Peter, welcome back to the program. My point is, investors don't trust stock trading. I'm not talking about stock prices. I'm talking about the stock trading system. They think it's corrupted by the big guys and technology is not reliable. It seems to me they're moving away from the stock market as an investment vehicle. What do you say?
Well, I don't think it's about a fear of trading. I think it'd be more about a reflection of performance. If you look at where a lot of individual Americans got invested in the stock market, they got attracted to the market in the late 1990s in the tech bubble. And here you are 12 years later, and many of the stocks are well below their peaks at that level. Meantime, the price of everything that Americans buy, food, gasoline, has gone up dramatically. So stocks have significantly underperformed over that period of time. So I think it's the performance that has got investors frightened, not some of these high-profile events like the flash crash or what happened with Knight Capital. Remember, there was a lot of opportunity in the flash crash. If you took advantage of that, you were able to make a lot of money buying some stocks at very cheap prices.
Do you think the glory days are over for the stock market?
No, I think the glory days are over for the bond market. I mean, maybe they're not over today. I've been saying this for a while, just like I was warning early on the housing bubble. But I think more investors who have sought out bonds as an alternative to the weak performance in stocks, I think that's where the next catastrophe is going to be as far as catastrophic losses in bonds, and not just treasuries. I think any long-term debt instrument denominated in dollars is going to go down, but particularly the sovereign credit that people perceive it as being so safe. But the way I look at it, there's only two alternatives for bondholders. Either they lose due to default or they lose due to inflation. And the default risk even includes treasuries.
Okay. If you don't like bonds, if you say that's the site, the venue of the next catastrophe, how do I take advantage of that? What do you think goes up when this is crashing?
Well, I think the dollar is going down. I mean, so what goes up is everything else, gold, silver. I think stocks will go up, but I think you've got to be careful which stocks to buy because the environment will not be favorable to all stocks. I have preferred foreign stocks for quite some time. They've actually underperformed in recent years, although over the past decade, you'd be much better off had you invested abroad than in the U.S., and I expect that long-term trend to resume. And there are a lot of countries that have much sounder economic and monetary policies than we do, so there are safe havens around the world. They've been a little rocky over the last year or two, but I think ultimately they'll provide good returns. In the meantime, there's a lot of dividend yield. There's a lot of stocks around the world that are paying very high dividends, and for Americans who are starved for yield because they can get very little in the bond market, and even U.S. stocks, there's not a lot of dividend yield there. So if investors look abroad, they can get much more income to cushion any volatility in the short run and ultimately give them a hedge against inflation and a collapse of the bond market.
Real fast, it seems to me that the cheapest asset where there is the most value these days would be a single-family home in a good neighborhood in America. Are you going to tell me I'm flat out wrong?
Yeah, you know, the only reason to buy a house is to take out a 30-year fixed-rate mortgage and win based on having your debt wiped out due to inflation. I don't think the real value of U.S. homes is going to rise. I think it's going to continue to fall. And you have to realize that real estate right now is being propped up by record low mortgage rates and huge government subsidies for the housing market in the tune of Fannie and Freddie and the FHA. Eventually, those props are going to be knocked out from beneath the market, and prices are going to fall down. And if we don't get the runaway inflation, if we get a more responsible Fed that aggressively raises interest rates, then you even have the risk of a big nominal drop in home prices. So I would not be looking at real estate as an investment. I mean, if you need a place to live and you can't find something good to rent, but don't look for a return to the 80s, the 90s, or the 2000s, where people made money off their home. A home is a liability. It's a depreciating asset. You buy it like a car or a boat. Don't expect to get rich. Buy it if you want to enjoy it, but you're spending money. The home is not going to pay for itself. You're going to have to work harder to afford it.
Peter Schiff, we'll remember this interview because you said the coming catastrophe is in bonds. All right, we'll have you back on that one too. Thanks very much, Peter. Always a pleasure. Thank you.